Hello, and welcome to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is October 10th, 2025, and we are taking a close look at Alphabet, ticker symbol Google. We'll start by breaking down the flurry of recent news surrounding the company and then dive deep into the charts to see how that news is translating into price action. There's a lot to unpack, from major legal victories to new product launches and fresh regulatory scrutiny, so let's get right into it. Fundamentally, the picture for Google has been overwhelmingly positive recently. The stock had a massive 14% run-up in September, fueled by several key developments. First, initial fears that generative AI would disrupt Google's core search business have largely subsided, with search revenue reporting a solid 12% year-over-year increase in the last quarter. The biggest news, however, was the landmark antitrust ruling in early September. A U.S. judge ruled against breaking up the company, allowing Google to keep its Chrome browser and its lucrative search partnerships, including the multi-billion-dollar deal with Apple. This was seen as a massive win, removing a huge overhang that had worried investors for years. Following this news, analysts have been quite bullish, with firms like Wedbush raising their price target to $245. On the business front, Google continues to push hard into AI, recently launching Gemini Enterprise, an AI platform for businesses, and securing a partnership with a firm for its agent payments protocol. However, it's not all smooth sailing. Just today, the UK's Competition and Markets Authority designated Google with strategic market status, which could lead to stricter and more costly regulations. Simultaneously, the EU is demanding more information from Google regarding child protection online. In the US, the Justice Department is still pushing to prevent Google from bundling apps with its Gemini AI service. So while the primary sentiment is bullish, these regulatory headwinds are definitely something to keep an eye on. Now, let's see how this all looks on the daily chart, which gives us the long-term perspective. As you can see, Google has been in a powerful uptrend for most of the year, rallying from a 52-week low around $140 back in April. The most significant price action directly related to our news is the massive green candle right here on September 3rd. This is the market's reaction to the favorable antitrust ruling. The stock gapped up significantly, jumping from a close of about $211 the previous day to over $230. This event kicked off an incredible two-week rally. Zooming back out to the full daily chart, we can see that this rally continued until September 19th, where the stock printed its 52-week and all-time high at $256. This $256 level is now our key resistance area to watch. Since hitting that peak, the price has entered a healthy pullback and consolidation phase. It has pulled back about 6 to 7% from its highs, which is very normal after such a strong run. We can see the price found strong buying interest in the $239 to $241 range, establishing this zone as a critical short-term support level. Notice how the price tested this area yesterday, October 9th, and bounced off it. The battle between buyers and sellers is currently happening right at this support. If this support level holds, it could be the base for the next leg up. However, if we see a decisive close below $239 on high volume, it could signal further downside. The next major support level below that would be the top of that September 3rd gap, around $225 to $230. Let's switch over to the 1-hour chart to get a clearer picture of this recent price action. Here we can clearly see the downtrend from the $256 high. The price action has been making a series of lower highs and lower lows. Yesterday's session was particularly bearish, with a sharp drop from around $244.50 down to the key support at $239. However, looking at the last several candles representing today's session, we see a strong reversal. The price has bounced firmly off that $239 support and is trying to reclaim the $244 level. This short-term momentum shift is a positive sign for the bulls. For this bullish momentum to continue, we need to see the price break above the recent consolidation high of around $246. A failure to do so could see the price retest the lows near $239. Now, for an even closer look, let's drill down to the 15-minute chart for today's intraday action. The market opened today around $241.43, slightly below yesterday's close. We saw an initial dip to a low of $240.89, another test of that crucial support zone. Since that morning low, the buying pressure has been consistent throughout the day. We can see a clear uptrend forming with a series of higher highs and higher lows on this intraday time frame. The price has rallied strongly to a high of $244.09 so far. This shows strong demand at these lower levels and suggests that bulls are currently in control of the intraday trend. The key challenge for the rest of the day will be to hold these gains and preferably close above the $244 level. This would set a very constructive tone heading into next week. So, let's recap the key takeaways from our analysis. The fundamental news backdrop is largely bullish, driven by the antitrust win and strong AI momentum, though regulatory risks are emerging. On the daily chart, the macro trend is undeniably bullish. Our most important price level to watch on the upside is the all-time high and major resistance at $256. To the downside, the critical support zone is between $239 and $241. This is the line in the sand for the short term. So, what are the potential scenarios? First, the bullish scenario, which I believe has about a 65% probability given the current context. If the $239 support continues to hold and the price can break and consolidate above $246, the path is clear for a retest of the $256 all-time high. Positive news from the upcoming earnings season would be a major catalyst for this. Second, the bearish scenario, with a lower probability of around 35%. If a broader market correction hits or negative regulatory news intensifies, a break below $239 could happen. If that support fails, the next target for bears would be filling the gap down towards the $225 to $230 area. A decisive break of support on heavy volume would reinforce this scenario. The main thing to watch for moving forward is the upcoming earnings report for Q3, which will give us the next major update on Google's financial health and growth trajectory. Also, keep an eye on any further headlines out of the UK or EU regarding new regulations. Thank you for joining me on Explain the Charts for this deep dive into Google. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own thorough research before making any investment decisions.